Broadcasting now.
Good afternoon. I'm Scott Humphrey, the CEO of the World Floor Covering Association. Thank you for joining us for the latest Knowledge is Power webinar. Today, our focus is COVID-19 stimulus legislation, what you need to know, and how you can help. Many of you are aware we've had many of these conferences in the past. I tried to count, but no matter what I came up with, I'm sure I would be on the light side. We've probably to 50 at this point to keep you informed. And one of the things that for us is our relationship with our lobbyists. And so today you will have the opportunity to meet our partner at Lobbyit, Max Perkins. He's going to be part of this webinar, and Jeff King, who you're very familiar with, our legal counsel for the WFCA. Let me give you a little background, tell you how this is going to work, and then I'm going to turn it over to them. And as you have questions, things that occur to you, please use the question and answer or the chat icon at the bottom of the page, and that will allow you to ask the question. I'll throw that back to them as our experts at the end of the webinar today. If you have anything on the financial side, Steve Abernathy is also with us, so he can fill you on anything. This is not just on what we're talking about today, but could be on something related to the PPP, SBA loans, anything else that we have covered in previous webinars. Our touch points with the industry as the WFCA have increased dramatically, literally thousands of direct one-on-one communication, blog, email blasts, phone conversations. Jeff, you had a question?
Yeah, I think Lewis has to turn off everybody's mics because we're getting a lot of feedback.
See if this is better then after he does that. Is that better?
Much better.
Okay, fantastic. Thank you, Jeff. So I want to let you know that we've been working with the industry as a whole and trying to partner with everyone within the industry to make sure that we are up to date on the most latest news that's out there, and also working together to create solutions for you. So if you have any questions about anything that's happened up to today related to the coronavirus, please go to WFCA.org. You'll see there the coronavirus response page. Just click on that tab and you'll see everything we've done, state-by-state guidelines, SBA loans, PPP loans, forgiveness, everything that you've asked questions about. Jeff has done an amazing job of responding individually to people who have come to him with questions. And again, he works directly with Max Perkins and Lobbyit to give you information, but also really to decipher information that's coming out of DC and translate it into a language that we can understand and that's applicable to our business. So I'll introduce Jeff to you again. And Jeff, I think somewhere in the course of the presentation, you'll have an opportunity to tell them a little bit more about Max and introduce him. Jeff King is the legal counsel for the WFCA. He is a partner in J. King and Associates. He practiced law in DC and Florida and many other places, and has been our counsel for well over 20 years, and probably knows more about the industry than any other legal counsel that's out there. Jeff is a vital part of our team, and we're thankful to have him. He has really poured it on during the coronavirus, sharing his knowledge and information and going above and beyond to make sure that you have the answers that you need in a timely manner. So Jeff, thank you. I'll turn it over to you and let you move forward.
Thanks, Scott. Welcome, everybody. I hope we can provide some information today and get your help as well, is what we need. Lewis, can we put up the PowerPoint? Are you controlling it, Lewis? If you are, then click to the next slide, okay? What we're going to do today is cover basically what's going on legislatively and regulatory wise. We're going to talk about the key provisions of the House HEROES Act, the anticipated issues to be addressed by the Senate counterproposal, the key issues and proposals that affect WFCA and its members. We're going to also talk to you how you can help us with the grassroots campaign to ensure that we get in these bills the aid that you need. And in fact, that's really a good part of what we hope to do, is find out what you need to make sure we're all up on this, okay? Next. I'm going to introduce you to Max Perkins. Max is a vice president with the firm of Lobbyit. They're our principal lobbying firm. We've been together now for, didn't count, but at least 5-6 years. I will always tell this story to tell you how influential they are. The first time I ever met them, we were in a had gone up to DC to push on some legislation that affected you all through the sales tax issues. And we were supposed to meet in Senator Durbin's office, and the government went on strike. So, which is, Senator's still in session, what do we care? Well, we have to get into the senator's office, and the line to get in, they closed every but one door into the Senate office building, and the line to get into that building probably extended over a mile. And I'm thinking, well, I got a meeting in 15 minutes. I don't think we're making this very well. Well, these folks took me to this back door that only lets in staffers, but they've all been staffers, so everybody knew them. It's a little early to let in non-staffers. If you know it, you'll know to get in there at the right time. They let them in anyway. We walked by truly the bowels of the building. I mean, we're talking about sewage pipes over our heads and water pipes and everything. All of a sudden, we catch this old beat-up elevator. We go up. Next thing you know, I'm in front of Senator Durbin's office. They know their way around, and they've proven it time and time again. They have turned us into one of the go-to groups on small businesses. We now get calls from congressmen and senators to comment on their proposed legislation. What are the issues? And they're a very, very vital group of this. I think Max can probably explain the group better than I, and can explain their approach to lobbying better than I. So Max?
Yeah, thank you, Jeff. Thanks for the warm introduction. Good afternoon, everyone. It's a pleasure to be with everyone. Thank you for inviting me, Scott, Jeff, Steve. It's a real pleasure. So Lobbyit as a firm, we were founded to be different from the other lobbying firms in Washington, D.C. We were designed to give a voice to smaller, medium-sized organizations that were priced out of the city and priced out of really the governing process. So, you know, our business model focuses on transparency, price, and delivering a large ROI for the amount of investment that our partners trust in us. We stand on the merits of the stories that our clients have to tell. So in that sense, the World Floor Covering Association has allowed us to project really just an honest viewpoint of small business issues, everything from, you know, overtime to sales tax to silica regulation. You know, Congress very much views the WFCA as an honest broker of information, and we have leveraged that good name to ensure that WFCA continues to be a part of the governing process, no matter the issue, and truly are seen as a benefit, especially now during the pandemic relief stage, which has really become unprecedented in the amount of both assistance that the federal government has doled out, but also the speed in which they've done so. The other thing I think we want to mention real quick, and I know we'll cover at the end of the presentation, is our embrace of the more 21st century characteristics of the lobbying industry. In particular, that's software that can leverage the voice of the grassroots through email and social media to really drive home those really high-level concerns to members of Congress and the administration in a very quick and easy manner. And later in the presentation, we'll discuss exactly how it is that you can help us in delivering our message to Congress. But it's as simple as 4 clicks of the mouse and an email message on behalf of yourself and your company. So we'll cover that a little bit later. Louis, next slide. Great. So I just want to recap very quickly, as we mentioned at the top, what the HEROES Act was, what it intended to do, and how it remains relevant today. So if you can recall all the way back to May 15th, I know it seems like 2 years ago at this point, but the Democratic-controlled House passed a $3 trillion massive piece of legislation that would provide additional financing support to small businesses, as well as direct capital assistance to major industries in need, like the airline industry, the hospital industry, and state and local government. They also included a number of other wish list provisions like unemployment insurance extension and student loan forgiveness, mortgage deferment, and things like that. Things that are designed to assist, I think, the everyman in navigating through what society has become during the pandemic. I think the provisions were designed to give peace of mind in an uncertain time. However, it was just that. It was a wish list. It was meant as sort of a marker that could be placed by the Democrats as to what ultimately they would stand for, both going into the presidential election year as well as what they would stand for as the two sides get together to negotiate over a round 5 relief package. I want to dip into the specifics just a little bit, but I want to pause and see if Jeff has any extra color to add there.
The only aspect to it is that the original HEROES Act included a bunch of fixes for the PPP loan. And those were actually subsumed in and used when the Senate passed its PPP Loan Flex Act. They negotiated. It basically included everything the House had in their bill as it relates to the PPP loan, the safe harbors, the maturity date being moved from 8 to 24 weeks, the extension of coverage for more time. The safe harbor employees don't want to return those things. So you go to the next slide and you'll see a few more of the things that Max was talking about.
Exactly. Thanks, Jeff.
You're welcome.
So you can tell, I think, by the breadth of the issues that were contemplated by the HEROES Act that this was meant to be sort of a catch-all, really a messaging bill rather than sort of a serious attempt at legislating a final relief package before the campaign season really kicks off. And so as we look forward to the next 7 to 10 days where we think we'll see some honest negotiation and some real movement toward a final relief package, we, of course, are looking for things like PPP adjustments, longer term, low cost working capital assistance, and a number of other priorities. But some things that we think, much like,
Next, go to the next slide. You'll be able to look at the Senate bill, and it'll give you a lot of those pieces.
Oh, sure. Yeah, just one final note on HEROES. It was very forward-looking, especially with the PPP changes. Jeff talked about how those changes were already incorporated into the PPP Flexibility Act. And so we do think that there are some other provisions like the hospital relief fund, the state and local relief fund, some extension, albeit probably at a much lower threshold of the unemployment insurance. We do think a number of provisions from HEROES will eventually make it into a final package. We're just unsure at this time what it all kind of looks like. So transitioning to the current slide, the Senate Majority Leader Mitch McConnell from Kentucky is expected to release his first draft counter proposal to the HEROES Act over the next 24 to 48 hours. We're being told from Senate staff that they are starting to see preview language, but nobody has seen the whole draft proposal just yet. And so a couple of issues have started to trickle out, and we have them here listed for you as what we believe will be in the first iteration. So what we think the proposed legislation is expected to call for is a new round of direct payments to Americans, but likely with a lower income restriction, liability protections for schools, businesses, and other institutions as they begin to reopen, likely billions of dollars of new funding to upgrade state-level testing capacity and contact tracing, additional changes to the Paycheck Protection Program, likely an extension through the end of the year, the creation of a second draw program for those businesses who may have already exhausted their first round funding and may qualify through some sort of means testing for a second loan, we'll likely see about $100 billion for schools as they start to restart operations, making sure that they have the necessary PPE, the protective personal equipment for teachers and students. And if physical upgrades need to be made to the schools themselves, that money will be available. And then finally, we think that the first round draft counterproposal will also include a provision to provide flexibility in the funds that Treasury has already provided to state and local governments to give them additional flexibilities on covering programmatic shortfalls due to the loss in tax revenue. That is an area that has been long haggled over. It's been a Democratic priority. We expect McConnell to move a little bit more in their direction. It may not be everything that Democrats want, but state and local governments should, I think, have a little bit of peace of mind that at least this first draft will include a good deal of what they want on that front. Finally, we think that there'll be some tax credits offered to small businesses for health and safety upgrades. And again, much like the money that's available to schools, making sure that small businesses have PPE and if physical upgrades are needed to ensure social distancing practices are adhered to, those tax credits will likely occur on a business income basis. It's been posited that it could occur at the payroll level, but we remain uncertain as to how that will be structured. A return to work bonus for employees is also contemplated, likely by this first draft. It may not be equal to the $600 bonus that they were receiving during their existence on unemployment rolls during the pandemic, but it could allow employees to keep an additional portion of their unemployment insurance into employment so that it is an incentive for them to return to work. And then finally, we do think that there will be some extension of unemployment benefits and the pandemic bonus on top of the fully guaranteed salary. So it might not be $600, it might be in the order of $200 to $400, but we do think that the government will continue to provide that lifeline to the unemployed. Jeff, do you want to touch on anything here?
No, I think you've got it. It's, I'd flip to the next slide. It kind of lists some of the things you talked about. So I think there's that aspect to it. I think that kind of sums up everything that we've seen so far out of the Senate based upon their negotiations with the White House yesterday and the day before. But you may want to touch on the Restart Act because that's kind of a unique concept and it's been getting at least some discussion up on the Hill, I understand.
Yeah, absolutely. So the Restart Act is a bill that was introduced by Senator Bennett from Colorado and Senator Young from Indiana, and it is an attempt to address the long-term working capital needs of businesses that are in the revenue loss range of about 20 to 40% year over year. Folks that may not qualify for a second forgivable PPP loan because they don't cross that 50% revenue loss threshold, but are certainly deserving of additional assistance. And so the program was sort of designed as a bridge away from PPP, and I can cover some of the very specifics here. So again, borrowers would be required to self-certify a revenue loss of no less than 25% for an 8-week period during the pandemic, as compared to an 8-week period last calendar year. The loan is designed to finance the equivalent of 6 months worth of fixed operating costs, benefits, and payroll up to a maximum loan size capped at the lesser of 45% of 2019 gross receipts or $12 million. These, again, are going to be low-cost interest rates with rates somewhere between 2 and 4% and a 7-year maturity rate. These are sort of acknowledgments to the banking community that extremely low-cost loans, somewhere in the 1 to 1.5%, and longer-term loans north of 10, 15, 20-year maturity lengths aren't feasible due to the impacts that they have on banks' payrolls and their asset management processes and practices. So I think this is probably the best deal that Congress can come up with for small businesses, while also ensuring robust participation at the banking level. The loans will be 100% guaranteed by the federal government, much like the PPP program, and no principal payments are required for the first 24 months. No interest payments are due for the first 12 months. So this is another PPP style bill that is designed to provide some additional capital assistance to small businesses, and one that we know Secretary Mnuchin is also mostly supportive of. So we do expect portions, if not the entire bill, will be included in round 5 relief package.
Max, the original Restart bill also was modeled partially after the PPP loan with partial forgiveness in it. It was a much stricter aspect. It was based upon the percentage of losses. It was not based upon, you could use it for capital, but that was not a forgivable portion, those types of things. Is that still in this bill?
Yes, it still remains in the bill. Yeah.
So it's still a partially forgivable loan. I think it can be close to up to 6% of it could be forgiven, as I recall, for the original draft.
Yeah, so we don't know exactly how that part is going to play, especially given the fact that there is a lot of support for a second draw PPP program. Mnuchin was very non-descriptive as to the provisions that he did not support. Most recently, he testified on Friday before the House Small Business Committee, and the Restart program did come up. I suspect that there might be some forgivable nature, but I think that ultimately that characteristic of the program will likely be a primary aspect of the second PPP draw program rather than any new financial assistance that's offered by the federal government.
Yeah, that was my impression. There may be some forgiveness in it because there'll be people who don't qualify for PPP loan that could qualify for Restart loans. But
right.
Go to the next slide. Maybe you can explain where they agree on, where they fight on between these two proposals.
Yeah. So we're hearing right now that Republicans are negotiating within their own party and with the administration over a payroll tax cut, holiday deferment, whatever term you want to use to describe what President Trump is trying to offer to small businesses and their employees. And they continue to talk amongst themselves about the top line number for the relief package. We've heard some angst from more conservative Republicans like Senator Cruz of Texas and Senator Paul of Kentucky that another $1 trillion price tag relief bill is worrisome and troublesome, given the amount of debt we've already incurred this year as a federal government. So there are still some major issues that need to be worked out, even within the Republican Party, before they begin negotiating with Democrats in earnest. But as you alluded, there is already some common ground between where Democrats are and where Republicans are, and we have a few of the items here listed. A second stimulus check, as I just mentioned, it'll likely be at a lower salary threshold, so likely those earning $50,000 a year and below will be eligible for a second federal stimulus check. Increased funding for testing, contact tracing, and additional R&D expenses for modernizing or rapidly expanding testing and results. So we're talking about laboratory expansions and things like that. Funding for schools is obviously one that most folks agree on. However, Republicans do think that there should be some strings attached to school reopenings, as the president has said multiple times over the last several weeks. And then, of course, more financial assistance to small businesses. I think everybody roundly agrees that a PPP extension is in the offering, as well as some additional resources for small businesses. The main sticking points remain unemployment insurance, the size and the scope, how long can folks remain on these government uninsurance rolls, what amount of their salary are they entitled to, and do they remain eligible for sort of a pandemic unemployment insurance bonus, if you will, that $600 bonus. Liability protections is going to be a very important negotiating point. Republicans have apparently drafted some language that would provide protections for those who adhere to CDC and OSHA guidelines. And Democrats are more in favor of mandating that those agencies write regulation and ensuring that businesses and institutions, schools, theaters, large gathering events and things like that adhere to those formal regulations so as to have a regulatory defense rather than a legal defense. And so this will be a very big sticking point. We know that this is Senator McConnell's top priority, and we expect this to be one of the last issues that's resolved. Funding for state and local government, while there is some agreement, there's much disagreement on the amount that's necessary and whether states should be able to use the federal funds to backfill for lost revenue. And then obviously the president's favored policy, at least in the last several days, has become the payroll tax holiday. How is that structured? Will employees have to pay it back? These are all things that remain unresolved and open to negotiation, and we look forward to how these will all play out very shortly. Jeff, anything to add there?
No, I think we go next slide probably. I think you covered that well. It's probably, these are the key issues for WFCA. I think Max covered them fairly well so far, but we think what we need to be supporting is the automatic forgiveness for small loans. The issue is at what level is that? I think Max, correct me if I'm wrong, I think the Republican idea is any loan below 150 is be automatically just forgiven without any further extension. We would probably like to see that increased a little bit, but at least that will give a great deal of aid for our smaller members, and our independent contractors and our installers will get a great deal of benefit out of that. The extension of the program through the year end, in other words, as we know, August 8th is the last day you can apply for a PPP loan. There's still money available there. I encourage anybody who hasn't applied, please do apply. But the idea of extending it further, this is important to have a second round of this, particularly we have states now that are surging. I can imagine folks in California, there's potential for a shutdown there. You could be very adversely affected in this PPP second round. You may have already gotten your first round when you were being crushed with closures in April. It's time for another second round, particularly in possibility that August and September are going to see more closings in certain states. So that's the second draw concept. We'd like to see it expand to C6, so organizations like WFCA have an opportunity to be able to get them. We fall within the base definition in the Restart Act, actually had it expanded to it, and it actually set a limit that puts us well within that range. And then obviously we'd like to see some corrections in the Small Business Administration regulations. We're going to do that both regulatory wise, but we've already been approached by the Senate Committee on Small Businesses about these issues for us, and Max set up a really good conference call with them, and we're following up some information. You go to the next slide, Lewis, if you would. So again, the things that we're looking at to help you out with is the new loan programs, liability immunity, which we think is important. We understand the concept, but OSHA and CDC have refused to issue their guidance as regulations. If the regulations, compliance with them would automatically show you have taken appropriate steps and would greatly reduce potential liability. And that's what the issue is. Do they need to do it as a regulatory matter, or simply following the guidelines sufficient to avoid liability? And that's where the showdown is coming up. We are, in all honesty, In many ways, we wouldn't care, but I actually would prefer to have it as a liability immunity proposal rather than a regulation, because a regulation can be enforced, and if you make a simple mistake in the regulation, you get yourself fined. If you follow the basic guidelines here, you're probably better off. The repercussions are just different. We obviously want tax credit for the PPP that you guys buy, whether it's just plexiglass, you know, a rearrangement of your storage, the masks you provide, the gloves that you're giving customers and masks, all of that costs money. And we'd like to see you get tax credits for that. The unemployment benefits we want to work with. We don't want to see you continue to be suffering from the fact that you can't get employees back. On the other hand, we don't want to hurt people that you can't rehire. We want to make sure they can survive this. Max can tell you more about the Pandemic Risk Insurance Act. I'll just give you the briefest overview. We've been very active in this. It is to extend business interruption coverage through starting next year. Unfortunately, that's compromised in the bill, but if they will extend that, they can get some federal funding to cover those losses. If they don't extend it, then they're back into the soup of whether they're obligated under the physical damage issue, whether a virus, infected virus is considered physical damage. Courts have gone both ways on that already. Some cases have been dismissed, some cases have continued, so that's going to be an issue. And then there's been some proposals about skill training and education funding for that to transition to a different economy that will be emerging at the end of this stuff. And we are obviously clearly in it, very much into that. Max, you got anything to add on those issues?
No, I think you covered it. No, that's great.
Next slide, Louis. These are the regulatory issues, and these are, I'm just going to give you the briefest concept, but they are complicated, and I apologize. The Small Business Administration has interpreted the PPP loan forgiveness as this way. If you're an owner-employee, then you have a limit on what you can get paid under what's going to be forgivable by the amount you're paid on your payroll. So if you're an LLC and pay your taxes individually like in a partnership, you are capped, each employee is capped at a percentage of their income. If you max that at the 100, that would be, if you're 8 weeks, it's $15,385. If you use the 24 weeks, it's $20,833. What they do is, if for the 8 weeks, they take the total salary you got for the year, and then they multiply that by 8 52nds. So they take 8 weeks divided by 52 weeks, and that's the most you can pay. If you do it for the 24 weeks, they do it a different way. They take the 2.5 multiplier you use, divide that by 12 and apply it. The concept is that it also, if you're, unless you're a C corporation, you cannot include your healthcare costs for these employees. The problem is, what's an owner-employee? An employee, I say employer, it's employee. It's a typo now, I apologize. So, you know, many of you own 80, 100% of your company, and that's fine. You know, or you have a partner, you each own half of it, or you both have real control. But we've already gotten folks, and we're asking more and more people to give us this information. We have people that, you know, they reward their salesmen. Each salesman gets a portion of a 15% set aside of ownership interest in it. Well, you know, that means on the average, these guys, you know, have what's, you know, somewhere about 4%, a little under 4% of the ownership. Yet are they going to be capped this way on this forgiveness issue? And I'm certain you didn't include that when you added it up. So that's the issue on owner-employee. The 25% salary wage reduction, as you may recall, to get 100% reduced in your loan, you had to verify that you had not reduced anybody's salary by more than 25%, okay? The way they've interpreted, they've done it individually. It's not a collective number any longer. We had thought they would look at it collectively, because we have some folks, and again, we're trying to gather data to get this fixed. So if you have experiences, we have some folks that have said, I didn't want to pay, I made good money the past couple of years. I want to make sure my employees are whole, so I'm going to take a 50% salary reduction. And I'm going to pay them the difference, so they don't have to take the reduction. And in one case, they may take very little, if anything. Well, the way the SBA is interpreted, if you cut your salary by more than 25%, anybody's salary, including the owners and the officers, then that individually, it's dollar for dollar, and that reduction will be taken off. And for each week it's done, it'll be added and reduced by the amount. So if If it's $100 a week and you take 24 weeks, it's $2,400 reduction that you can't deduct out of there. We think that's ludicrous and we'd like to fix that. There are a number of other forgiveness issues we're working on. We're submitting responses to these regulatory issues next, I think, Monday. It's the 27th, whatever day that is, on this. But we're also going to push Congress to look at this. And Max is working with me to put together a small proposal to Congress explaining these issues. We highly request that if any of you have experienced it, if you're an S corporation, a C corporation, or an LLC, if you have minority owners or you give out bonuses based upon, as a percentage, any of those natures, let us know so that we can use you as an example of why we have to fix this craziness. Or if any of you have taken bigger than 25% salary reductions in order to ensure your employees are paid, let us know about that as well, okay? Next slide. So this are things, Max, you've already helped us a little bit with what we expect. We expect something going on by next week. We expect.
So we expect McConnell to introduce some written counterproposal over the next 24 to 48 hours. That, assuming Republicans can reach agreement within their own conference in the Senate and with the administration, once that proposed counterproposal is out, that'll really kick off I think the sprint to finalize negotiations before the end of the month. As I'm sure most of you are familiar with, Congress typically recesses during the month of August to go home and meet their constituents. And this year being a presidential election year with a number of vulnerable Republican Senate seats and potential control of the Senate up, I no doubt think that that will weigh on senators' minds and help speed negotiations along. However, we are starting to hear staff warn of a protracted and an elongated negotiation process that might last until the middle of August. And again, some of the facts on the ground will also dictate, I think, how quickly our leaders come together on an agreement, whether we start to see any sort of dissipation in coronavirus rates in some of the hotspots, or if we continue to see increases in a number of cases on a per capita basis that can also spur a very quick agreement. So there are a number of factors here, a lot of moving parts, but we do expect the next 7 to 10 days to be very crucial in terms of finding an agreement that both sides can agree to. So that's the next 7 to 10 days, and then of course the regulatory process to implement all of the programs, all the programmatic changes. We will certainly stand by WFCA side as we have done throughout the pandemic to ensure that your specific issues are considered by federal regulators and to ensure that your voice is heard. It's been such a crucial part of our advocacy efforts thus far. And then of course,
maybe you can explain what we need from our members
to
do in order to advance our agenda, in order to try to see if we can get as much out of this legislation as possible that will help WFCA members through this, and whatever comes out of this process.
Yeah, exactly, Jeff. So over the coming days, WFCA will produce an email letter request for its members to send to your legislators that detail our requests in terms of relief programs and policies that are important to our small businesses. And we need you to participate in that process by simply emailing your legislators the requests that we come up with. We use an automated system. There's an automated legislator lookup function. It takes 4 clicks to complete once you land at the WFCA website. They're amplifying a small voice into a much larger voice is is a necessity at this point in the political process. And we rely on our grassroots to do that. We really need everybody's participation. I was just informed that membership has continued to grow over the last several weeks. And we really need great participation rates above 75, 80% in order to really make a difference. And it's incumbent upon you guys to take some ownership of that. And we would very much appreciate participation in our grassroots campaign.
And I want to let you know is that this legislation is moving so fast, our impact may not be as great as we normally would like it to be, because some of these things are baked in already. And I can't imagine that. We can have an impact, though. We can move that little bit of a needle. Maybe it's a little more money, a higher threshold for automatic forgiveness, make sure the PPE tax credit is there, or some kind of relief is there. But equally important is it puts our name again in front of everyone. So the next major thing that comes along, they keep looking for us to get information from, so that we get, as we're dealing with the issue that we talked about earlier about the owner-employee issue, they came to us and we're giving them information. We're trying to help them effectuate either through their contacts with SBA or directly through legislation. That's what we get out of doing these grassroots. We become a force to reckon with. And so we highly encourage you to do this. It is so simple. You'll go to WFCA website. I think it's going to say Corona's legislative action or something. You click onto that. You type in your name and your address. It automatically tells you who your congressman is and who your senators are. It automatically populates the letter, and you push another button and it's gone. And it's so quick but so powerful. You are voters and you are business owners in these communities. I cannot tell you how important that is.
Yeah, I don't think we could make it any easier. And we've done this before. We know the process works. All you have to do literally is go and click, go through the process, sign your name. The letter's written for you. I don't know what else it would take for us to make that simpler. So, thank you, Max. And as Max said, our membership has grown dramatically. I mean, dramatically over the last few months. But that has no value at all if our voice is not heard. And so when we do a call like this, we don't simply put these out all the time. It's because this matters, and this is a chance for you to let your legislators know this is important to you, and this is what you want them to focus on in their negotiations.
You go to the next slide, Lois. And this really is, we need to know what you need, what you want. What are your pressure points? Where's the pain being felt? So we can figure out what we can do for you and what you can do to make this process work.
So there's a couple of things that will be coming up to you. First of all, we'll be sending out communication to all our members. It's a number close to 10,000 right now. When you see that communication, it will have a link embedded into it to take you through the process that Jeff and Max have communicated to you. In addition to that, on our website, we will have a site where it says Coronavirus Response, the Resource Center. We will have a link there as well for you to click on if you go to the website. We hope to have that up as early as Friday, but if you'll check back later this week, beginning of next week, even over the weekend, we will have something up for you that will allow you to go through that process. We are still formulating the letter to get all the information in that we think is pertinent. But again, this only has value if you, and not only you on this call, but you need to amplify your voice by reaching out to others in the industry and asking them to go through this very simple 2 to 3 minute process so that their voice can be heard. All right, I do have a couple of questions, some from me, Jeff, and Max as we went through this, but one that came to us from Charles. He says, do commissioned salespeople who experience a reduction in pay due to reduced salaries activity and earning less commissions, do they count in the 25% salary reduction?
The answer is kind of yes. Clearly a legal answer. I went to law school to learn weasel words. It's cloudy outside, so it appears to be, you know. The reality, though, is that yes, that's the basic answer. But there are some exceptions to it. If you are unable to maintain that salary because of changes in your business due to regulations, and the way the SBA has interpreted that includes some state shutdown laws. So they couldn't earn their commissions during this time because you couldn't sell because your store wasn't open. You might be able to get around that. They allow you to get around that, bringing them back and the salary reduction. I do want to point out that it does raise another question. One of the examples we were given was we have a salesperson who has an ownership interest. Well, what if they went to hire? What if their if their ownership, their sales were actually higher that year? Well, they have a cap on it. How much can be paid through the PPP loan? Mm. So in that case, you can't pay them the extra money, at least not with PPP loan money. Somebody also raised, I thought, Scott, a question regarding the unemployment and $600 and how long it lasted. I do want to let everybody know that the PPP Loan Flexibility Act says that if you have an employee that you offer a job back and they don't return, and you've not been able to fill it with somebody else, then that does not count towards the number of employees of the 25% rule. Mm. Okay?
That's important. And Jeff, I hope I was correct in that. It's through the end of July, right? That's
through the end of July. And what Max is talking about and explained was that there's a possibility and a likelihood, in fact, I think, that will be extended. Not only the benefits themselves, which generally in most states expire after 26 weeks, I believe, but the idea of the federal funding of it, the $600, is also going to be extended. And it's more likely, and that's going to, but it's going to be at, I suspect, a reduced value. And I think he's absolutely right. It's going to be somewhere between $400 and $200. The Democrats, they're going to compromise. Democrats want $600. Probably the Republicans, unless you're Ted Cruz, who doesn't have a slight disagreement. His quote this morning was, "I'm not saying no, I'm saying hell no." So he's a little adamant about this.
We'll count him at the zero range.
What?
We'll count him at the zero range.
Yeah. But generally, I think we're going to be somewhere in that range. And then some of that's going to be, you're going to be payable to you anyway. If you go back to your job, there's going to be that's how they're going to fill that in. Some states allow partial unemployment already. So if somebody comes back, they can actually make more money by working part-time, and because the $600 does not get reduced. Even if you were only getting 10% of your unemployment, you still get the 600 plus the 10%, and your regular pay, you can actually, and most states take the first 25% of that pay and don't count it towards the reduction in the unemployment anyway. So there's a whole bunch of rules. Different states are different ways, but we're going to see that. So I do think the issue is going to fade a little bit, but I do think there's going to be some of that around.
Cool. Hey, Jeff, would you speak very quickly? I've had several people that I know that are sole proprietors that did not apply for the PPP loan. And I wonder if you would just speak to the availability of that for sole proprietors.
I think you're crazy not to. If you're a sole proprietor, you can get $20,833 free. And that's the easiest I can tell you. All you got to do is go to SBA, PP loan, application. It'll pull up an application. It'll explain how you fill it out. You're going to go to your Schedule C, which is what it's going to tell you to do in the instructions. And there's an amount of income on Schedule C, and I forget off the top of my head what line it is. You take that number and you multiply it by 2.5, and that's what you get. If you make $100,000 or more, it's capped at the 100. And at $100,000, that's $20,666. Excuse me, $20,833. It's free money, to be honest with you. You have to certify you've had some impact. I can't imagine you haven't had some impact on whether it's more expenses, you can't bring as many employees in, it's taking longer to get jobs done. What you would normally be doing 10 jobs, you're doing 5 jobs. All of that, you probably have it. And the assumption is it did affect you. There's an assumption being now made that anybody under $2 million loan automatically has that. So every sole proprietor should apply for it. I don't know how much is left, but as the end of June, it was $131 billion was left in that fund to take, and you need to take it. So I highly encourage you to do that. There's no reason not to.
Yeah, I heard as lately as yesterday that there was still $100 billion available in that. I don't know if that's changed, but Yeah.
No, that's,
Especially
Scott,
in,
that's about accurate. And we're hearing they might add another $100 billion onto the program to last it through the end of the year. So for those who haven't taken a first draw loan, there'll be plenty of money, most likely after the end of July, for folks to get their first PPP loan.
But I would tell you now, because while we know this legislation is likely to pass with some extension to it, I can't imagine it won't. The reality is we don't know when. And at the moment you have till August 8th. So, you know, you might as well do it now, get your loan in. It's when your loan is applied. You can also go on the SBA website and they'll tell you what lenders are still taking PPP loan applications.
Right.
They give you all that information for you. You can also just type into your Google search and say PPP loan lenders. And they'll give you the list that way. Most of them break it down by state if you want it. And it's all that data is available. It's a few clicks on your phone. You fill out the application online. You download it onto your computer. You type in the words on it. You can also just print it out and do it. But you send it back in. And the next thing you know, you send it to the lender. They approve it. And within a week or so, you're going to have money in your pocket and will help you through these trying times.
Yeah, no doubt. Max, I want to go back to something you were talking about earlier in the liability protection. So I serve on a board of a local school here, and we're talking about students going back. One of their concerns is the possibility of some type of lawsuit if somebody gets sick from the virus because we open back up. So speak again to where the different sides stand on liability protection.
Sure. So Senate Republicans would like to offer liability immunity for those businesses who follow CDC and OSHA guidelines for their industries via legislation. So essentially, it would be the federal government offering a statutory immunity to small businesses if they do X, Y, and Z. And we're still uncertain as to what X, Y, and Z is, but that's the approach that they would like to take. Democrats, on the other hand, would like to take a regulatory approach. They would like to bolster OSHA's and CDC's guidance into official rulemaking that would be enforceable. And they would only give you small businesses and schools and other institutions liability protections if they adhere to the letter of the regulation. Now, there are some, as Jeff mentioned earlier in the presentation, there are some concerns about that. If you unknowingly made a mistake in following the regulation, you then become very susceptible to potential challenge or potential liability. And so the two sides will have to negotiate out what they think the best course of action is. There are some thoughts as to how limited the powers of the federal government could be in this area to afford blanket immunity from these types of actions. It's uncertain at the moment, but Republicans are certainly pushing very, very hard to include robust protections for small businesses, major corporations, the travel industry, schools, and sporting events and so on, so that we can return to some sort of normalcy in our daily lives and give folks, the operators of those institutions, at least, a peace of mind that they're a little bit protected as well.
Yeah, just add on to that, Scott. This is the first issue, the last issue Max raised, the first issue I want to mention is that many of these lawsuits will be under state law. And the question is, will the federal law preempt that without a regulation? If the regulation is done to be preemptive, then that creates a different issue. And that's part of the issue. There are a number of states that have already given out immunity for these. Some of them are blanket immunity, some of them are immunity if you follow the guidelines for that. The other issue is that if it's a regulation, it gives you more protection, but it also gives you more risk involved. So if I do 90% of the regulation, I miss 10%, I may end up with liability. If it's a guideline, it's a practicality aspect to it. You have to take reasonable precautions to be liable. There's no strict liability there. And I'm saying I did the guidelines, but this was not practical, even though they were in the guidelines. I could not do that portion of it. That you may get away with in a jury trial, where if a regulatory issue, a violation of the regulation may create sort of automatic liability. And that's where one gives you much more protection, particularly against state lawsuits, but it also gives you much greater risk. And that's where I think there's going to be some immunity here. I just don't know how much it's going to be.
Yeah.
It's just too important to McConnell for him to let this go easy.
Yeah, but Jeff, we should mention the state of Virginia just came out with their own temporary standard for employers in the state, which is the first state to do so, and will likely serve as a test case, at least in the early going here, as to how well that serves to protect from liability concerns.
There are some other states that have given liability immunity, and there are some other states that have issued, New York and Michigan have issued, I believe, their own standards. But this, Virginia specifically ties liability to a standard. It's the first time anybody's really seen that done with their own standard. Now, in all honesty, they simply have basically taken the OSHA and CDC standards and modified them into their own. But that's going to be an interesting issue to see, and it would be much cleaner if we had a federal aspect to it. But again, there's risk to that.
I want to remind you guys as we close in on the end of this webinar that if you have questions, you can post them in either the Q&A section or the chat section. As we're wrapping up, I want to go back, Max, to you and just ask you, what is the time frame? Can you review that one more time on when we think we will see the next response from legislation?
Yes, absolutely. We expect Senator McConnell will introduce his priorities over the next 24 to 48 hours, assuming all goes well within their own internal negotiations with the administration. And then that'll really kick off a 7 to 10 day sprint for negotiations. We expect that the relief package will be wrapped up by the end of the month and delivered during the month of August. However, there are some growing concerns among congressional staff that negotiations could linger a bit into the month of August, which could slow down the provisions of assistance. But I'm so confident that our leadership will come together as they did for the CARES Act to offer additional relief to small businesses and individuals and families. And that's most likely that will be most likely to occur before the end of the month.
Fantastic.
And finally, before you go, Scott, I just want to encourage everybody. You can email me or telephone Max or I, either one of us, if you have any other concerns, if you have anything you want to suggest we should be considering putting into any bills, that we should be pushing on regulatory aspects to it, any issues you have. So please let us know, because the more information we get from you, the better we represent you.
That's right. We want to be your voice, and we appreciate your membership in the WFCA. Share that as well. Free membership for primary members. If you know of anyone who is not a member of the WFCA, please ask them to join their voice with ours so we can be heard. Max, thank you so much. Thank you to you and what you do for us. And you've been amazingly busy, you and Jeff both, getting information to us. We really appreciate you and appreciate Lobbyit. Jeff, thank you again. And I would remind you one more time, if you have questions about anything covered in any of the previous webinars, please go to our website, WFCA.org. You'll find a whole section there on everything related to the coronavirus. With that, I see no additional questions, and I thank you guys, and we will sign off. Until the next Knowledge is Power seminar, have a great rest of the week.
Thank you.